All of us know that old iceberg analogy where success is this little piece on top of the water, but all the struggle, dedication, work, and ethic that go into building that little piece of success that shines is much greater at the bottom. Well, what's interesting is success is never dependent upon one thing, but James Clear, the author of Atomic Habits, does make it clear failure can be. And unfortunately, the advisory team at FEG has seen failure transpire into one of our critical elements and has wrecked an entire financial plan. So Jamie, my co-host, and I will go through those 5 critical elements, why they're important, what you should be paying attention to in those elements. Look forward to having on the show, and we'll get right to it. Welcome to Consider This Program. I'm your host, Grant Soliven.
And I'm Jamie Burton.
Jamie, it is so good to have you here, the dynamic duo, and actually I'll probably say with every person because it just feels nice. But anyway, really glad to have you here. You are phenomenal. And Jamie, no better person to have on the show to talk about the 5 critical elements of financial planning and why they matter. Mm-hmm. I mean, you have done a great job of leading our families through some of this. And so today, do me a favor, if you'll just go ahead and talk through what the 5 critical elements are, and then you and I'll go back and start just kind of picking each one apart along the way. So What are those 5 critical elements?
Yeah, so the 5 critical elements that we make sure that we talk about in our meetings with our families are your life after work. So what happens once you have finally worked all those years, gotten to the point where you're ready to leave the workforce? What does that look like for you? And how can we make sure that we build a plan around that? The second one is tax planning. That is huge because that is one of the main things that we see can really wreck your financial plan if you are not focusing on tax planning. The third one is the investment playbook. We want to make sure that the investments that you have, that everything that you are invested in makes sense with your journey and where you are going. The fourth one is risk management, the good, the bad, the ugly of life. We have to make sure that we are seeing the big picture, knowing what could happen and planning for that, making sure that we have something in place if something were to go wrong. And that fifth one is what Grant was alluding to, the legacy planning. That one is often missed, but it's so important for not only your future, but the future of your beneficiaries and your loved ones that you leave behind.
Absolutely. Well done, Jamie. A great, beautiful way of looking at those 5 critical elements. And so now let's go back and start unpacking each one of these. And folks, if your advisor is not going through each one of these elements with you and sending you follow-up on each one after every meeting you have throughout your year, then you probably should find another one. just my personal plug there, because each of these elements is so critical to review every single year. And sometimes there's nothing to change. And we'll get to the good, bad, and ugly of life here. We hope that you only have to live through that situation once. Our team has lived through it many times, and so the resources we'll have when we get there. But Jamie, going and focusing back on your life after work, why do we call it your life after work and not retirement?
Because a lot of times when we see people get to the end of their career, they don't just stop working. A lot of times they go and do what they want to do, or they are focusing their time on a volunteer effort, or they are deciding that they're going to start babysitting their grandkids. So people don't just go and stop working. They're going to be doing something, and we need to make sure that we have a plan in place to help them live those goals, to help them live that lifestyle, because everyone's is different. You never know what people have in store for their future.
100%. Very well said. People don't stop working just to sit on a couch and expire. A lot of our families, Jamie, you know this, we've been on phone calls together where they've said, I don't know how I had the time while I was working. And oftentimes that is a mantra many of our families live by. They are busier in their golden years than ever. Also, it's your life after work because realistically, when you're getting to this stage, oftentimes some families just go back and maybe find a secondary career that's a little bit slower. My mom's a great example. She retired for 2 weeks, got bored out of her mind, and went and found another job. So it's just the elements inside of this that are key and crucial to remember are when you're getting to your life after work, remember you have to have a retirement practice year. That is incredible. And what we mean by that is you have to break down your standard of living. What are your fixed expenses? What are your social expenses? Our advisory team, as our families are getting ready to retire, walk you through what your standard of living is, how to factor that in. And before you get to that year of your life after work, we want you to have a practice year all the way up to that to make sure that you understand what your expenses truly are and how to manage those appropriately getting into your stage of life. Also in your life after work, we need to start looking at how do we use certain income strategies. Okay, this will also tie into tax planning here in a second. But there's a lot that goes into the art and dance and science that is retirement, and we don't call it retirement very specifically for many reasons. Getting into the tax planning, this is the niche that our firm really, really lives in. The tax code is immense. I was on a call yesterday with a family who said the tax code is the largest thing she's ever seen, and I think we can make 2 encyclopedias worth of volumes out of this tax code they just created, and no one understands it. And quite frankly, it is complicated. We work with very wonderful CPA partners, and on any certain subject, they can also sometimes have differing opinions and ideas. So, Jamie, when we're looking at tax planning, what are some of the key critical elements FEG is focusing on and that we're talking with our families just this year and going forward?
Yeah. So one of the big things that we want to make sure is when people get up to that age of retirement and into retirement is that they have different buckets of money that they can pull from to be able to have that standard of living met from the investments that they've saved. So if a lot of people, once they get to retirement, they found that all of the money that they've saved through their working years was into their 401k or 403b, all these tax deferred assets where all the money in there, they've worked so hard to save, but they haven't paid taxes on a single dime of that money. So that's when we have to sit back with those families and come up with a plan of getting some of that money unwound from those different tax deferred buckets of money, get some into the Roth IRA, or see if they have other assets they can save into a brokerage account where they've already paid taxes on the money today, and then they pay taxes on the earnings and the growth going forward. So we really want to make sure that we can break up that tax deferred money so we have more flexibility when they need to pull the money out in retirement. And that's huge because we only know what the tax code is today. We can only take advantage of what the tax code is today, knowing that in the future, it's most likely going to be different. If no changes are made in Congress before December 31st of 2025, we know that that tax code is going to sunset back to what it was in 2017. So we know that if nothing else changes, at least the tax rates are going to go up and those brackets are going to go up. So we have to do what we can do today to take advantage of the tax rates.
Well said, Jamie. And that tax code, as she beautifully illustrated, is always changing. And it could change beforehand if Congress even gets the whiff to do so. So making sure that you have a very well-oiled tax plan is critical when going into your golden years, but also when preparing for retirement as well. So the next is the investment playbook, and here's where I'll kind of lead everyone to on the investment side. There's a couple recordings that have come out in the past and will come out in the future that will kind of go through diversification, asset diversification, etc. Here's what I'm going to tell you for the investment playbook. Have a process. Whether you do this on your own, that's your business. If you want to hire a fiduciary, that's ours. But regardless, in either scenario or situation, have a process in place because when market volatility rears its ugly head, if you are too emotionally engaged, you miss out on some of the opportunity that can present itself on the tax side and in other ways when it comes to that investment side. So your investment playbook is radically critical. Most people, that's all they want to talk about is return, but it's our job as advisors to ensure that the entire critical elements, all of them, all 5 of them, are inside the mix. So the second piece, or the fourth piece actually, is the good, bad, and ugly of life. And Jamie, when we talk about that, what are some of the areas we're focusing on in there that are critical to our families?
Yeah, so a couple of the areas in there that we are looking at is life insurance or long-term care insurance. So what we have found is that one of the biggest concerns for the families that we have coming in is that they've seen their family or their parents go into a retirement home and they are in there for a lot longer than they expected them to be in there, and it just eats away at those assets in a way that they weren't expecting or weren't prepared for. So it's a big fear that people have going into meetings with us. How can they protect against that? Do they need to protect against that? Do they have assets that are sufficient to cover them to where they are self-insured and don't need an extra policy to prepare against that? So that's a big discussion that we have with our families to make sure that they are protected and they're not just going to throw everything that they have saved to a retirement home and have nothing to leave for their spouse or for the beneficiaries and their loved ones.
100%. And a couple other elements we do want to add to that is, triggers and transitions. As often we've talked about on this show before, what's happening in your life, how that transpires to your financial situation. So not only we're looking at kind of those risk management issues that Jamie beautifully brought up, we're also spending time on what happens if you lose a spouse, right? What happens if you lose a job? What happens if you're forced to early retirement? What are some of those life happen events that are going to occur to you? And our team has put together checklists that you can find on our website, yourlifeafterwork.com, that'll help you line item those out and help you find clarity in those situations. So not only we're looking at risk management, like Jamie said, we're also looking at all the types of events that can happen to a family in their situation and how that could potentially wreck that. So if you're looking for resources in some of those situations, go to our website, see what we have. There's a lot of checklists out there that we've put together for your use. One other thing, I'm going to go back. I'm going to rewind for a second. I forgot to talk about our market carver. So in the investment playbook, if you're looking to understand what FEG is thinking on the investment side, please register for our market carver if you don't already have it. You know, our managing partner and our portfolio managers come on every week and talk about what's going on in the economy and the market in that week and what we're thinking about and how we're modifying our investment philosophy accordingly. And so finally, kind of jumping now back to the fifth critical element, the legacy plan, you're going to find that it's very deeply important to us, and I won't steal a whole lot of thunder from our managing partner, Joe, as this is going to be his life's work. But just remember, a legacy plan is critical. Many families want to leave money to their beneficiaries. And remember, not all beneficiaries are equal. From a tax stance, from an estate stance, and just because you love them equally does not mean we have to treat them equally in estate documents, because that could hurt them and you and your wealth going forward. So if these are questions and these elements are something you want to dive deep into with our advisory team, please reach out to us, 800-928-4001. To contact Brittany. She'll get you in front of one of our talented advisory team members, or you can ask questions at yourlifeafterwork.com. We're glad to help and answer them.